Here is what this session covers. Part A, Issuance and Utilization defined. Part B, 5 responsibilities in issuance and utilization. Part C, preparation of issuance documents. Part D, issuance and acknowledgement of items. Part E, receipting of issuances. Part F, accounting for receipt, issuance, and utilization. Part G, preparation of reports. Part H, reconciliation of property and accounting records. Part 1, prescribed forms, consolidated reference. Part J, legal and regulatory basis, consolidated. Part K, 20 common misconceptions. Part L, 20 pitfalls and corrections. Part M, 20 audit deficiencies. Part N, 15 challenging questions. This session is organized around a 5-step sequence: documents, issuance and acknowledgement, accounting, reporting, and reconciliation, and closes with a complete reference list of every form named along the way, with its exact appendix or annex number. Next slide. Part A, Issuance and Utilization defined. 2 related but distinct concepts governing what happens once property leaves custody and reaches an end user. This opening part defines the 2 core terms of the session and shows how they relate. Issuance is a single event, while utilization is the much broader ongoing goal that issuance serves. Next slide. What issuance and utilization mean? Issuance, put simply, is the moment custodianship of an item passes from one person to another, most often from the property or supply officer's care into the hands of an end user or accountable officer. Utilization is the wider goal issuance serves, getting real service and economy out of government supplies, materials, and equipment, which in practice means honest procurement upstream, disciplined transfer and recording of control, genuine care and maintenance while the item is in use, and the timely, appropriate exit through disposal once it is not. Issuance and utilization must be properly supported by the required reports, so that the related expenses are correctly recorded in the agency's books. Now, in a bit more detail. Notice the scope difference between these 2 terms. Issuance is the single moment custody transfers, while utilization is the much larger goal that spans procurement, control, care, and eventual disposal. Issuance is one event inside the much longer story of utilization. Next slide. Part B, 5 responsibilities in issuance and utilization. The activities that must all take place, in sequence, for a proper issuance transaction. This part previews the 5 activity sequence that structures the rest of the session. Each one builds on the one before it. Next slide. The 5 activities. 1. Preparation of issuance documents, the RIs, PR, PO, PAR, and ICs that authorize and record a release of property. 2. Issuance and acknowledgement of items, the actual release, matched with the end user's signed acknowledgement. 3. Accounting for the issuance and acknowledgement of the items, recording the transaction in the appropriate ledger cards. 4. Preparation of monthly reports, summarizing issuances for the accounting division's use in preparing journal entries. 5. Reconciliation of property and accounting records, confirming that property side and accounting side records agree. Now, in a bit more detail. These 5 steps are not just a checklist, they are a genuine sequence. Each one depends on the one before it. Documents come first, because nothing can be issued without them. Reconciliation comes last, because it confirms everything upstream actually happened correctly. Next slide. Part C, preparation of issuance documents. The forms that must exist before any property may properly leave custody. This part covers the documents that must exist before any property is properly released, the RIs, the PR, and how they differ. Next slide. The core issuance documents. Requisition and issue slip, RIs, used by the end user to request the issue of supplies and materials already carried in stock. Also used by the property or supply division to indicate availability or non-availability, and to record the issue of requisitioned items. Purchase request, PR, used by the end user to request the purchase of inventory or items not available in stock. It is the basis for preparing the purchase order. Property acknowledgement receipt, PAR, used by the supply or property division to report the issuance of property, plant and equipment and the end user's acknowledgement of receipt. Inventory custodian slip, ICs, and purchase order, PO, the remaining documents in the standard set that, together with the RIs, PR, and PAR, authorize and evidence every issuance transaction. Now, in a bit more detail. The distinction between the RIs and the PR is the one most worth remembering. The RIs is for items already sitting in stock, while the PR is for items that are not in stock and therefore need to be purchased first. Next slide. Part D. Issuance and acknowledgement of items. The point at which custody actually changes hands. This part covers the actual moment of release, and what makes an issuance legally complete on both sides of the transaction. Next slide. Rules governing the actual release. Property shall be issued only upon presentation of a duly approved RIs, PR, PO, PAR, or ICs, as applicable to the transaction. The accountable officer or end-user receiving the property must duly acknowledge receipt in the pertinent document. The transaction is not complete on the property officer's side alone. The full set of forms used to document receipt, issuance, and utilization of inventory and PPE items is found in GAM for NGAs, Volume 2, and in Commission on Audit Circular Number 2022-004 and its annexes. Now, in a bit more detail. Notice this is a two-sided requirement. The property office needs the approved document before releasing anything, and the receiving officer needs to actually sign for it. Either side missing makes the transaction incomplete. Next slide. Warning: an unsigned issuance document is not evidence of accountability. Releasing property against an approved RIs or PAR, ICs, but without the receiving officer's actual signature leaves the agency unable to establish who is individually accountable for that item. Treat the end user's acknowledgement as a mandatory step in the transaction, not a formality to be completed later. In a bit more detail, this warning targets a specific, common shortcut: releasing property against an approved form but never actually securing the end user's signature. Treat that signature as a mandatory step in the transaction, not paperwork to chase down later. Next slide. Part E. Receipting of issuances. Which form applies to which kind of movement? This part covers which specific form applies to which specific kind of movement, a distinction that is tested often because the forms sound similar. Next slide. Matching the form to the transaction. Property Acknowledgement Receipt, Appendix 71, used by the Supply or Property Division to report the issuance of PPE and record the end user's acknowledgement. Property Transfer Report, Appendix 76, used whenever property transfers from an outgoing officer to a successor, or from one accountable officer or employee to another, whether within the same entity or to another entity. Where the item transferred from one accountable officer to another is an inventory item rather than PPE, the Inventory Transfer Report, ITR, is the form to accomplish instead. Now, in a bit more detail. The detail worth remembering specifically is the PTR versus ITR distinction. The Property Transfer Report is for PPE, while the Inventory Transfer Report is for ordinary inventory items. Using the wrong one is a common, easily avoidable error. Next slide. Part F. Accounting for receipt, issuance, and utilization. The accounting side and property side ledgers that must both be kept current. This part covers the accounting side of issuance. The ledger cards accounting maintains, in parallel with the separate records the property or supply division keeps for its own control purposes. Next slide. Ledgers maintained by accounting. The accounting for the receipt and issuance of supplies and materials is performed by the accountant. This accounting function includes maintaining the supplies ledger card, SLC, the property, plant and equipment ledger card, PPELC, and the semi-expendable property ledger card, SPLC. Now, in a bit more detail. These three ledger cards exist in a completely separate location from the property or supply division's own records. That separation is deliberate, since it is exactly what makes reconciliation between the two sides meaningful. Next slide. Records maintained by the property or supply division for control and monitoring. Stock card, SC, records the receipt and issuance of supplies and materials, maintained for each item in stock. Property card, PC, records the acquisition, transfer, disposal, and other information about PPE, kept for each class of PPE. Semi-expendable property card, SPC, records the acquisition, issue or transfer or disposal, and description of semi-expendable property. These property side records exist in parallel with the accounting division's ledger cards. Control depends on both sides being kept current and, eventually, reconciled. Now, in a bit more detail. Notice each of these three records has its own scope. the stock card per item in stock, the property card per class of PPE, and the semi-expendable property card for the intermediate category between the two. Next slide. Part G. Preparation of reports. The monthly reports that translate issuance activity into accounting entries. This part covers the monthly reports that translate issuance activity into actual accounting entries. Next slide. Monthly issuance reports. Report of supplies and materials issued, RSMI, prepared based on the RIs. This report captures issuances of ordinary supplies and materials. Report of semi-expendable property issued, RSPI, prepared based on the ICs. This report captures issuances of semi-expendable property. Both reports are used by the accounting division as the basis for preparing the journal entry voucher that records the supplies, materials, and semi-expendable property issued. Now, in a bit more detail. The detail worth remembering here is which source document each report is built from. The RSMI comes from the RIs, while the RSPI comes from the ICs, not the RIs, a distinction the challenging questions later in this session will specifically test. Next slide. Part H. Reconciliation of property and accounting records. The step that confirms issuance accounting is actually complete. This part covers reconciliation. The step that confirms issuance accounting is genuinely complete, not just recorded. Next slide. Why reconciliation comes last, not last resort. The accounting for issuance is not complete without proper reconciliation of the property records against the accounting records. Before property records can be reconciled with accounting records, the supply or property officer must first ensure that the existing property records are themselves reconciled with the actual inventory count. This two-step sequence, physical count reconciled to property records, then property records reconciled to accounting records, is what makes the reported balances trustworthy. Now, in a bit more detail, this is a two-step sequence, not one single check. Property records first get reconciled against the actual physical count, and only after that is complete do property records get reconciled against accounting records. Skipping the first step undermines the second. Next slide. Part 1. Prescribed forms, consolidated reference. Every form named in this session, with its appendix or annex number, in one place. This part is a consolidated, appendix-numbered reference to every form named in this session, useful as a lookup table rather than something to memorize slide by slide. Next slide. Forms reference, 1 of 2. Requisition and issue slip, GAM for NGAs, Volume 2, Appendix 63. Purchase request, GAM for NGAs, Volume 2, Appendix 60. Purchase order, GAM for NGAs, Volume 2, Appendix 61. Property acknowledgement receipt, GAM for NGAs, Volume 2, Appendix 71. Inventory custodian slip, GAM for NGAs, Volume 2, Appendix 59. Property transfer report, GAM for NGAs, Volume 2, Appendix 76. Now, in a bit more detail. Treat this slide and the next one as a lookup table rather than material to memorize in order. But do notice how many of these forms trace back to GAM Volume 2 specifically, which is worth knowing as the master reference for property forms generally. Next slide. Forms reference, 2 of 2. Report of supplies and materials issued, GAM for NGAs, Volume 2, Appendix 64. Report of semi-expendable property issued, Commission on Audit Circular Number 2022-004, Annex A.7. Supplies Ledger Card, GAM for NGAs, Volume 2, Appendix 57. Property, Plant and Equipment Ledger Card, GAM for NGAs, Volume 2, Appendix 70. Semi-expendable property ledger card, Commission on Audit Circular Number 2022-004, Annex A.2. Stock card, GAM for NGAs, Volume 2, Appendix 58, Property card, Appendix 69. Semi-expendable property card, Commission on Audit Circular Number 2022-004, Annex A.1. Now, in a bit more detail. Notice which forms on this second page come from Commission on Audit Circular Number 2022-04's annexes rather than the GAM directly. Those are specifically the semi-expendable property forms, and they use a different numbering system, Annex A something, rather than an appendix number. Next slide. Tip: keep a single master list of forms, with current citations. property or supply sections that keep an internal one-page reference of every form they use, with its current appendix or annex number, catch outdated citations faster than sections relying on institutional memory alone. Update that list whenever Commission on Audit revises the underlying circular, such as Commission on Audit Circular Number 2022-04's annexes for semi-expendable property. In a bit more detail, this tip is really a practical suggestion for your own office. An internal, one-page reference of every form your section uses, with its current appendix or annex number, catches outdated citations far faster than relying on memory alone. Next slide. Part J, Legal and Regulatory Basis. The issuances underlying every form and procedure covered in this session. This part consolidates every legal citation used throughout the session into one place, for quick reference. Next slide. Consolidated Legal and Regulatory Basis. Government Accounting Manual, GAM, for National Government Agencies, Volumes I and II. The prescribed forms, ledger cards, and reports for issuance and utilization of property. Commission on Audit Circular Number 2022-004, May 31, 2022, and its annexes, the current capitalization threshold, semi-expendable property classification, and the specific annexed forms for semi-expendable property, ledger card, property card, report of semi-expendable property issued. Now, in a bit more detail. This session draws from a narrower set of sources than most others in the course, essentially the GAM and one Commission on Audit Circular, which reflects how much of issuance and utilization is really about correctly using prescribed forms rather than navigating competing legal authorities. Next slide. Part K, 20 Common Misconceptions. Each entry pairs a commonly held but incorrect belief with the accurate rule and its legal basis. This part tests your understanding by presenting 20 commonly held but incorrect beliefs about issuance and utilization, each paired with the accurate rule. Next slide. 20 Common Misconceptions. Number 1. Myth. Issuance and utilization mean the same thing. Fact. Issuance is the act of transferring custodianship. Utilization is the broader process of using property economically across procurement, control, care, and disposal. Number 2. Myth. Property may be released informally as long as it is later logged in a report. Fact. Property shall be issued only upon presentation of a duly approved RIs, PR, PO, PAR, or ICs. As applicable, approval comes before release, not after. Next slide. 20 Common Misconceptions. Number 3. Myth. A purchase request and a requisition and issue slip serve the same purpose. Fact. The RIs requests items already in stock. The PR requests items not in stock and becomes the basis for the purchase order. Number 4. Myth. The property officer's signature alone is enough to evidence an issuance. Fact. The end user or accountable officer must also duly acknowledge receipt in the pertinent document. Next slide. 20 Common Misconceptions. Number 5. Myth. The property transfer report is used for every kind of property movement between offices. Fact. The property transfer report is used for PPE. An inventory item transferred between accountable officers uses the inventory transfer report instead. Number 6. Myth. The property or supply division alone maintains all ledgers relevant to issued property. Fact. The accountant separately maintains the supplies ledger card, PPE ledger card, and semi-expendable property ledger card, parallel to the property division's own stock or property or semi-expendable property cards. Next slide. 20 Common Misconceptions. Number 7. Myth. The stock card and the supplies ledger card are the same document. Fact. They are separate, parallel records. The stock card is kept by the property or supply division per item in stock, and the supplies ledger card is kept by accounting. Number 8. Myth. Monthly issuance reports are optional paperwork if the ledger cards are already up to date. Fact. The RSMI and RSPI are the basis accounting uses to prepare the journal entry voucher. Without them, the books cannot reflect the issuance. Next slide. 20 Common Misconceptions. Number 9. Myth. The report of semi-expendable property issued is based on the RIs. Fact. It is based on the inventory custodian slip, ICs, not the RIs. Number 10. Myth. Reconciliation of property and accounting records is optional if no discrepancy is suspected. Fact. The accounting for issuance is not considered complete without reconciliation, whether or not a discrepancy is suspected. Next slide. 20 common misconceptions. Number 11. Myth. Property records can be reconciled directly against accounting records without first checking the physical count. Fact. Property records must first be reconciled with the actual inventory count before being reconciled with accounting records. Number 12. Myth. Semi-expendable property forms are found in the same GAM appendices as PPE forms. Fact. Semi-expendable property has its own annexed forms under Commission on Audit Circular No. 2022-004, Annexes A1, A.2, A.7, separate from the GAM's numbered PPE appendices. Next slide. 20 common misconceptions. Number 13. Myth. The purchase order is prepared before the purchase request. Fact. The PR is the basis for preparing the PO, the PR comes first. Number 14. Myth. Any staff member may sign for receipt of issued property on behalf of an absent end-user. Fact. The accountable officer or end-user themselves must acknowledge the receipt of the property in the pertinent document. Next slide. 20 common misconceptions. Number 15. Myth. The 5 responsibilities in issuance and utilization can be done in any order. Fact. They follow a logical sequence: documents first, then issuance or acknowledgement, then accounting, then reporting, then reconciliation. Each activity depends on the one before it. Number 16. Myth. Utilization only concerns how an item is used physically by the end user, not its eventual disposal. Fact. Utilization explicitly includes appropriate and timely disposal as part of promoting economy in the use of government property. Next slide. 20 common misconceptions. Number 17. Myth. The property card and the semi-expendable property card serve the identical purpose for all PPE. Fact. The property card is for PPE generally. The semi-expendable property card is specific to semi-expendable items under Commission on Audit Circular No. 2022-004. Number 18. Myth. Issuance documents, RIs, PAR, ICs, are interchangeable and any one of them can support any transaction. Fact. Each form is tied to a specific kind of transaction: supplies from stock, PPE issuance, or semi-expendable property issuance, respectively. Next slide. 20 common misconceptions. Number 19. Myth. Once property is issued, the property or supply division's involvement with that item ends. Fact. The property or supply division continues to track the item through its ledger cards and through the eventual reconciliation process. Number 20. Myth. Commission on Audit Circular No. 2022-04's annexes apply only to national government agencies. Fact. The circular's guidelines were further supplemented specifically for LGUs by Commission on Audit Circular No. 2024-006. Next slide. Part L. 20 pitfalls and corrections. Recurring operational weaknesses in issuance, acknowledgement, accounting, reporting, and reconciliation. This part shifts from beliefs to behavior. 20 recurring operational mistakes actually seen in issuance, acknowledgement, accounting, and reconciliation, and the specific correction for each one. Next slide. 20 pitfalls and corrections. Number 1. Pitfall. Property is released before the corresponding RIs or PR or PO or PAR, ICs is actually approved. Correction. Release property only after the applicable document has been properly approved, not on a verbal go-ahead. Number 2. Pitfall. End users are issued equipment without signing an acknowledgement. Correction. Require the end user's signature on the PAR, ICs before treating the issuance as complete. Next slide. 20 pitfalls and corrections. Number 3. Pitfall. RIs forms are used to request items that are actually out of stock. Correction. Redirect out of stock requests to a purchase request instead of forcing them through an RIs. Number 4. Pitfall. An inventory item transferred between accountable officers is documented on a property transfer report meant for PPE. Correction. Use the inventory transfer report for inventory item transfers, reserving the property transfer report for PPE. Next slide. 20 pitfalls and corrections. Number 5. Pitfall. The property or supply division's stock card and accounting supplies ledger card are updated on different schedules, drifting out of sync. Correction. Update both records on a synchronized schedule so discrepancies surface quickly rather than accumulating. Number 6. Pitfall. Monthly RSMI, RSPI reports are prepared late. after accounting has already needed them for JEV preparation. Correction. Set an internal deadline for RSMI, RSPI preparation that precedes accounting's JEV cutoff. Next slide. 20 pitfalls and corrections. Number 7. Pitfall: the RSPI is prepared from the RIs instead of the ICs. Correction: base the RSPI specifically on the inventory custodian slip, as prescribed. Number 8. Pitfall: reconciliation between property and accounting records is deferred until year-end audit preparation. Correction: treat reconciliation as a regular, recurring step tied to each reporting cycle, not a once-a-year audit prep task. Next slide. 20 pitfalls and corrections. Number 9. Pitfall: property records are reconciled with accounting records without first checking them against the actual physical count. Correction: reconcile property records to the physical count first, then reconcile the confirmed property records to accounting records. Number 10. Pitfall: semi-expendable property is tracked on generic PPE forms instead of the specific annexed forms. Correction: use the Commission on Audit Circular Number 2022-004 Annexer forms, Ledger Card, Property Card, RSPI, for semi-expendable property specifically. Next slide. 20 pitfalls and corrections. Number 11. Pitfall: a purchase order is drafted before a corresponding purchase request exists. Correction: ensure the PR is on file and approved before the PO is prepared from it. Number 12. Pitfall: a colleague signs for an absent end user's issued equipment without written authorization. Correction: require the actual accountable officer or end user's signature, or documented written authorization for someone else to receive on their behalf. Next slide. 20 pitfalls and corrections. Number 13. Pitfall: issuance activities are performed out of sequence. For example, reporting before the acknowledgement is even signed. Correction: follow the 5-activity sequence in order: documents, issuance or acknowledgement, accounting, reporting, then reconciliation. Number 14. Pitfall: disposal planning for an issued item is treated as unrelated to how it was originally issued and tracked. Correction: carry the item's issuance and ledger history forward into disposal planning, since utilization explicitly includes eventual disposal. Next slide. 20 pitfalls and corrections. Number 15. Pitfall: property or supply staff cannot readily state which appendix or annex number applies to a given form. Correction: maintain an internal master list of forms with their current appendix or annex citations for quick reference. Number 16. Pitfall: semi-expendable and regular PPE issuances are recorded on the same ledger card without distinction. Correction: keep the semi-expendable property card and the regular property card as separate records. Next slide. 20 pitfalls and corrections. Number 17. Pitfall: staff continue using an RIs or PAR, ICs template that has not been updated for the current Commission on Audit Circular Number 2022-004 Annex numbering. Correction: review and update issuance document templates whenever the underlying Commission on Audit Circular is revised. Number 18. Pitfall: the property or supply division treats its involvement with an item as finished once it is issued. Correction: continue tracking the item through ledger cards and periodic reconciliation even after issuance. Next slide. 20 pitfalls and corrections. Number 19. Pitfall: LGU offices apply only the national agency version of Commission on Audit Circular Number 2022-004 without checking for LGU specific supplements. Correction: check Commission on Audit Circular Number 2024-006 for LGU specific supplemental guidance before finalizing LGU semi-expendable property procedures. Number 20. Pitfall: new property or supply staff learn the 5 responsibilities informally, with no written internal procedure to follow. Correction: document the 5-activity issuance and utilization procedure as a written internal guide for onboarding new staff. Next slide. Part M. 20 audit deficiencies. Findings typically raised on issuance and utilization, matched to the provision each violates. This part presents 20 audit findings in the exact style you will see in a real audit observation memorandum, each tied to the provision it violates. Next slide. 20 audit deficiencies. Number 1. Deficiency: property released without a duly approved RIs, PR, PO, PAR, or ICs. Number 2. Deficiency: issued property lacking the end user's signed acknowledgement of receipt. Next slide. 20 audit deficiencies. Number 3. Deficiency. RIs used for items that were actually out of stock, instead of a purchase request. Number 4. Deficiency. Property transfer report used for an inventory item transfer instead of the inventory transfer report. Next slide. 20 audit deficiencies. Number 5. Deficiency. Stock card and supplies ledger card materially out of sync due to unsynchronized updating. Number 6. Deficiency. Monthly RSMI, RSPI reports not prepared in time to support timely JEV recording. Next slide. 20 audit deficiencies. Number 7. Deficiency. RSPI prepared from the RIs rather than the prescribed IC's basis. Number 8. Deficiency. No evidence of periodic reconciliation between property and accounting records. Next slide. 20 audit deficiencies. Number 9. Deficiency. Property records reconciled to accounting records without first being reconciled to the physical count. Number 10. Deficiency. Semi-expendable property tracked on generic PPE forms instead of the Commission on Audit Circular Number 2022-004 annexed forms. Next slide. 20 audit deficiencies. Number 11. Deficiency. Purchase order issued without a corresponding, approved purchase request on file. Number 12. Deficiency. Issued equipment signed for by someone other than the accountable officer or end user, without written authorization. Next slide. 20 audit deficiencies. Number 13. Deficiency. Issuance and utilization activities performed out of the prescribed sequence, undermining traceability. Number 14. Deficiency. No linkage maintained between an item's issuance or ledger history and its eventual disposal record. Next slide. 20 audit deficiencies. Number 15. Deficiency. Forms in active use citing outdated appendix or annex numbers superseded by a later Commission on Audit Circular. Number 16. Deficiency. Semi-expendable property card entries commingled with the regular property card, with no separation. Next slide. 20 audit deficiencies. Number 17. Deficiency. Issuance document templates not updated following a Commission on Audit Circular revision affecting their content. Number 18. Deficiency. No further ledger tracking of an item after its initial issuance. Next slide. 20 audit deficiencies. Number 19. Deficiency. LGU semi-expendable property procedures applying only the National Agency Circular, without the LGU supplement. Number 20. Deficiency. No documented internal procedure for the 5 issuance and utilization responsibilities, relying solely on informal practice. Next slide. Part N. 15 challenging questions. A mixed format comprehension check, true or false, error spotting, multiple choice, and short scenarios, for self-testing at an advanced level. This final part is a genuine comprehension check. 15 challenging questions in a mix of formats, designed to test whether you actually understood the material. Next slide. 15 challenging questions. Number 1. Q. True or false. Utilization refers only to how an end user physically operates an issued item. False. Utilization is broader. It includes procurement, control and recording, care and maintenance, and eventual disposal, not just physical operation. Number 2. Q. Spot the error. An RIs is used by the end user to request the purchase of items not currently in stock. Which form does this actually describe? This describes the purchase request, PR, not the RIs. The RIs is for items already carried in stock. Next slide. 15 challenging questions. Number 3. Q. Multiple choice. Which form reports the issuance of PPE and records the end user's acknowledgement? A. RIs. B. PAR. C. PTR. D. RSMIA. B. The property acknowledgement receipt serves this function. Next slide. 15 challenging questions. Number 4. Q. True or false. An inventory item transferred between 2 accountable offices should be documented on a property transfer report. False. An inventory item uses the inventory transfer report. The property transfer report is for PPE. Number 5. Q. Scenario. A property office issues equipment against an approved PAR, but the end user never signs it. Is the issuance transaction complete? A. No. The end user's signed acknowledgement is required before the issuance is considered complete. Next slide. 15 challenging questions. Number 6. Q. Spot the error. The report of semi-expendable property issued is prepared based on the RIs. Correct the statement. The RSPI is based on the inventory custodian slip, ICs, not the RIs. Next slide. 15 challenging questions. Number 7. Q. Multiple choice. Which ledger card is maintained by the accountant, not the property or supply division? A. Stock card. B. Property card. C. Supplies ledger card. D. Semi-expendable property card. A. C. The supplies ledger card, PPE ledger card, and semi-expendable property ledger card are maintained by the accountant, in parallel with the property division's own records. Number 8. Q. True or false. Reconciliation of property and accounting records may proceed directly, without first checking property records against the actual physical count. False. Property records must first be reconciled with the actual inventory count before being reconciled with accounting records. Next slide. 15 challenging questions. Number 9. Q. Spot the error. The semi-expendable property ledger card is found in GAM for NGAs, Volume 2, Appendix 70. Correct the citation. The semi-expendable property ledger card is found in Commission on Audit Circular Number 2022-004, Annex A2, Appendix 70 is the regular PPE ledger card. Next slide. 15 challenging questions. Number 10. Q. True or false. The report of supplies and materials issued is used by accounting as the basis for preparing the JEV recording issued supplies. True. The RSMI, based on the RIs, serves exactly this purpose. Number 11. Q. Scenario. A purchase order is drafted and sent to a supplier, but no purchase request exists in the file. What is the deficiency? The PO was prepared out of sequence. The PR must exist first and serve as the basis for preparing the PO. Next slide. 15 challenging questions. Number 12. Q. Multiple choice. Which of the 5 issuance and utilization activities logically comes last? A. Preparation of issuance documents. B. Issuance and acknowledgement. C. Reconciliation of property and accounting records. D. Preparation of monthly reports. A. C. Reconciliation is the final step, confirming that everything recorded upstream is consistent. Next slide. 15 challenging questions. Number 13. Q. Spot the error. Commission on Audit Circular Number 2022-04's Annex forms for semi-expendable property apply uniformly to NGAs and LGUs with no further guidance needed. Correct the statement. Commission on Audit Circular Number 2024-006 supplements Commission on Audit Circular Number 2022-004 specifically for LGUs. LGU offices should check that supplement as well. Number 14. Q. True or false. A colleague may sign for an absent end user's issued equipment without any written authorization, as a matter of office convenience. False. The actual accountable officer or end user should acknowledge receipt, or provide documented written authorization for someone else to do so. Next slide. End of Session 6. Issuance and Utilization. This concludes the audio guide for this session. Thank you for listening. Here is what this session covers. Part A. Issuance and Utilization defined.